Look at this. It's so scary. Must sell. Must panic and sell everything. What's this little thing down here? Oh, look. Green. GM to AKT holders. The real Chads. What pullback? Real world students keep winning, of course. Let me go to the full chart. So a few things I want to look at here. I'm going to look at Akash and then I'm going to look at Arbitrum. Because I got my ARB trade got filled overnight. So AKT is basically going to blow off top. This is the trickiest part to trade. And look, if you're not already in, what have you been doing? Right? And I don't mean that at all in a bad way. I just mean that if you're new and you hear us talking about it, or you joined the campus recently or whatever. I've been in since 55 cents. Most students are in from below $1. Some students get in above $1, whatever. Like, understand where you're at in the trend. And I'll give because I know there's going to be a lot of people wondering and asking about Akash. So I'll give my full deep dive on it here today. I'll give you exactly what I would say you should do over the next few weeks or months, right? First thing, weekly EMAs. If you're trading, the weekly EMAs are probably the only chance you're going to get in onto this until it's finished its run, which probably goes to all-time highs, or at least close to it. I would say one of these two levels is where it's heading to. Now, that doesn't mean you can just ape in senselessly, because it can still reverse and go lower. I don't think it will, but it can. There's several things that can happen. But you have to understand, if you're new, you'll learn about this in bootcamp. The concept of expected value is a dynamic concept, meaning the expected value is basically, if you've played poker, you'll understand what it means, but you should study it. I've got a lesson on it. You can go to the psychology and mindset lessons and you can find expected value. It is the concept of, basically, is this bet that I'm taking more likely to be profitable or unprofitable over time? Not this one time. Any one trade can win or lose. But if I took this exact same trade 100 times, would I win more than I lose on average? That's basically what expected value means. It's just a framework for decision making. It means, is this a good decision? So you have to understand of the concept of dynamic EV, which just means that when you enter a trade, the expected value changes. So I bought at 55 cents. Bought between 50 and 60, average of 55, right? So right now, that's my current trade. It's 8R in profit currently. So if I was to enter here, that is not the same trade. Let's say my original trade, the target was here, 630. Okay? But if you wanted to enter here, and your stop loss had to be the same, and your target was up here, that is no longer the same trade. Your reward and your risk are totally different to what mine are. So you can't approach this the same way that I do with my original trade. Understand? Now, on top of that, you have to then update your position. So obviously, putting the stop loss all the way to there doesn't make sense. I wouldn't, if Akash goes back below $1, I would close. Me personally, 100% close. So take it that way. I cannot lose on my AKT. I can't lose my original position. I can lose a lot of unrealized profits, which I absolutely don't want to do, but I can't lose. If you were to put that to $1 as well, you can lose. And again, your upside is quite limited to your downside. It's not that great. So then you'll say, well, maybe I should put it here, and then it gets better. Maybe I should put it here below this week's low, then it gets better. But you can't just keep moving it up and up and up because you're in at a bad place, or you're in at a higher level. And so if you're looking to purchase AKT and you have not done so, you need to understand that you're not in the same trade as other people in the campus. You have to do your own trade. So I know the temptation is to ask me about it or to ask other students, but you cannot rely on other people for your trades. Because at the end of the day, you live and die by your own decisions. Even if you don't have experience right now, you can't just rely on someone else to make the decision for you. So it's totally fine to come in and say, look, I am thinking of buying AKT here at $3.18. I'm thinking of putting my stop loss at $2.15. And I'm targeting 632. And you can share that in the chats and you'll get a bunch of opinions from different students. None of those opinions are right or wrong. They're just opinions. Okay, people will tell you, no, it's already pumped, you shouldn't buy it. Or, yes, it shouldn't go to that level, it's breaking out, whatever. But again, none of that means that they're correct. Because the price from here could go like this. It could go like this. And it could go like that. And it could go like that. There's so many different paths price could take. That's really important to just stop and think about that for a second. Anything can happen. No matter how bullish I am, bearish I am, whatever. Anything can happen. So here's exactly how I'm playing it and have been playing it, which is $1.40 was this previous weekly level. If you see here, you go to the line chart, you'll see this in the lessons. This was the weekly swing high, the last push, the last attempt before we broke down into the final bear market lows. That's an important level because this is like, especially here, it held 140, it held 140, then we lost it briefly, right? But then it tried to reclaim. So support, lost it, retested it, sold off. This is a really important level from price action perspective. Now that's okay, but does it matter? Then we fast forward to 2023, it does matter because that was resistance, right? The market could not close above that on a weekly in August. We sold off and then we got above it. We broke above it, closed, broke above again, pulled back, retested, didn't quite test the 140, but again, that's bullish because it's front running, shows a lot of demand. So to me, that $1.40 level is really, really, really solid. And that would be like the lowest I would expect AKT to go on any new pullback to still be bullish. Simple way of explaining it is, if AKT went to 140 in the next few weeks, I would buy heavily. If it went to $1 and below that, I would be bearish. I would be very, very, very bearish and very hesitant because I would say that's extreme weakness, right? So if it were to pull back into 140, I would buy because I would think that's really bullish and a gift, essentially. But if it came back down the same way and didn't do that, it kind of bounced off it and then dipped down as it won, that's not good because then it's likely to flip 140 just like it did over here. It's likely to flip 140 back into resistance and actually be done. Again, I don't think that's going to happen, but I do plan every eventuality. Now, the upside was this exact level here. So $3, which you just hit. As you can see over here, it was a support level. Again, we lost it briefly, but then we got way above it. And then price chopped around at it. So a bit messy price action. Then it sold off to 140, bounced up, and here's what matters. The retest was right off that $3 level. $2.90 technically, but anywhere around that $2.93. With these areas, you want to look at them as zones because look at all the wicks. Like it's not perfect. It doesn't. You can't obsess over a very specific price number. It's a zone. So AKT is breaking through that big zone of resistance, and I think it's going to continue from there. Now, what matters is the weekly close because there can be and there will be wicks below that. Right? Do I think that 318 is the very bottom, we never go lower? No. I don't think that at all. I think that depending how it closes, you could see a wick back to 290 next week and it'd still be bullish. You could see a wick back here where I have the retest alert set at 260 and it would still be bullish. 270, it would still be bullish. And you've got the weekly bands below us as well, which you can see that the weekly EMA bands have been support all the way up and have held the market into a weekly uptrend. So we're now significantly above those bands, which is usually not a great time to buy unless you're just short-term trading. And so for me, clearing above this opens up the door for this and probably all-time highs. And it seems crazy, but this is how the parabolic moves tend to go. Again, I speak very carefully because I'm not telling you this is going to happen because I haven't a clue what's going to happen. I have no idea what's going to happen, and yet I've managed to ride AKT all the way from 55 to here. It's a good example of you don't need to know what's going to happen to make money. You don't. You need to know probabilities, right? But think about it all the way back down here. It was probabilities that got me to buy there. So how many of you would have thought when it was there that it was going to go to here? I certainly wouldn't have when I first started trading. I would have like, what? This is bearish. This is shit. Look at it. It's terrible.